we are diving straight into the action with the latest on Qualcomm. Analysts at Zacks Research have upgraded Qualcomm from a strong sell to a hold rating, and we break down what this means for the semiconductor giant and its stock performance right now.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we look at the institutional movement surrounding Qualcomm. Principal Financial Group, Inc. just increased its stake in Qualcomm, buying an additional 33,925 shares, and we explore the broader institutional buying and selling activity across the board. Now let's talk about the momentum shift. Qualcomm stock has seen a sharp rise in its momentum score, jumping significantly, fueled by optimism around AI and data center growth plans, and we examine the CEO's vision for the future of devices. And finally, we look at the future of connectivity with Qualcomm CEO Cristiano Amon predicting a massive shift away from phones toward AI-first devices like smart glasses. And don't miss out on all the breaking financial news. Stay with us. Qualcomm Nasdaq, QCOM, has seen a shift in analyst sentiment, with Zacks Research upgrading its rating from a strong sell to a hold. The company is also seeing positive movement from other research firms. Benchmark increased its target price to $225 and assigned a buy rating. Summit Insights upgraded the stock from hold to buy. Conversely, Sanford C. Bernstein reissued a market perform rating with a $140 price target, while Bank of America maintained an underperform rating with a $145 price objective. Barclays issued an underweight rating, raising its target price to $150 from $130. Across the board, the consensus rating from channel YouTube remains a hold, with an average target price of $172.40, reflecting a diverse range of analyst opinions, including 1 strong buy, 8 buy ratings, 16 hold ratings, and 3 sell ratings. Trading data shows that shares of QCOM opened at $186.67 on Monday. The company maintains a market capitalization of $196.75 billion, with a price-to-earnings ratio of 20.29 and a beta of 1.49. The stock has traded within a one-year range of $121.99 to $205.95, with its 50-day moving average at $136.57 and the 200-day moving average at $155.41. In recent financial reporting, Qualcomm posted quarterly earnings on April 29th, reporting earnings per share of $2.65, surpassing the consensus estimate of $2.56 by 9 cents. The company achieved a return on equity of 42.11% and a net margin of 22.31%, with revenue reaching $10.6 billion, slightly above expectations of $10.59 billion, despite a year-over-year revenue decrease of 3.5%. Furthermore, the board of directors approved a share buyback plan on March 17th, authorizing the repurchase of up to $20 billion in outstanding shares, a move often interpreted as a sign of management's belief in the stock's undervaluation. Insider activity has been noted, including sales by CAO Patricia Y. Gretsch and EVP Akash J. Palkiwala, alongside a total of 22,510 shares sold by corporate insiders in the last 90 days, representing 0.05% of the stock ownership. Institutional investor activity remains active, with major players such as Enterprise Financial Services Corp., Smart Money Group LLC, and Aware Super Thai Limited increasing their stakes in the company during the first quarter. Institutional investors and hedge funds collectively own 74.35% of Qualcomm stock. Qualcomm, a global semiconductor and telecommunications equipment company founded in 1985, is central to wireless technology, developing standards like CDMA and subsequent mobile standards. Its product portfolio spans Snapdragon-branded system-on-chip, SoC, platforms, cellular modems, Wi-Fi and Bluetooth connectivity solutions, and processors for automotive, IoT, and edge computing applications. Principal Financial Group, Inc. has increased its investment in Qualcomm Incorporated, boosting its stake by 2.7% in the fourth quarter. The fund acquired an additional 33,925 shares, bringing its total holding to 1,305,722 shares, representing approximately 0.12% of Qualcomm stock, valued at $223,344,000, as per its latest SEC filing. Activity among other institutional investors has also been notable. Cloud Capital Management, LLC, added a stake worth about $27,000 in the third quarter. Richardson Financial Services, Inc. significantly reduced its position, lifting its ownership by 90.9% in the fourth quarter, leaving it with 168 shares valued at $29,000. Torin Management, LLC, and the board of the Pension Protection Fund also made new purchases during the quarter. Glass Jacobson Investment Advisors, LLC, also adjusted its holdings, increasing its position by 113.5% to 190 shares valued at $32,000. Institutional investors collectively hold 74.35% of Qualcomm stock. Analyst sentiment surrounding Qualcomm remains mixed. Research coverage shows varied opinions, with Evercore setting a $179 target price, Loop Capital upgrading the rating to buy with a $185 target, and TD Cowen raising its target to $200 and issuing a buy rating. Other analysts have provided hold or neutral ratings, resulting in a consensus rating of hold and an average target price of $172.40. Financially, Qualcomm recently reported quarterly earnings, posting $2.65 earnings per share, slightly surpassing the consensus estimate of $2.56. Revenue reached $10.6 billion, though this represented a 3.5% decrease year-over-year. The company demonstrated strong profitability with a return on equity of 42.11% and a net margin of 22.31%. Furthermore, Qualcomm announced a quarterly dividend of 92 cents per share, increasing from the previous 89 cents, with an annualized dividend yield of 2%. The board also approved a share buyback program authorizing the repurchase of up to $20 billion in shares. In insider trading news, CEO Cristiano R. Ammon sold 10,000 shares on May 4th, and EVP Akash J. Palkhiwala sold 3,333 shares on February 6th. Over the last 90 days, corporate insiders sold 22,510 shares, representing 0.05% of the company's stock. Qualcomm, a global semiconductor and telecommunications equipment company specializing in wireless technologies, system-on-chip platforms like Snapdragon, and patent licensing, continues to navigate the technology landscape. The company's stock recently opened at $186.67, trading near its 50-day moving average of $136.57 and 200-day moving average of $155.41. The company's market capitalization stands at $196.75 billion. Qualcomm Inc. stock experienced a significant surge in momentum, jumping from a score of 21.53 to 43.64 week-over-week, fueled by growing optimism surrounding artificial intelligence and expansion plans for its data center division. Qualcomm CEO Cristiano Ammon highlighted that AI agents are fundamentally reshaping the company's roadmap across all platforms. Ammon confirmed plans to ship data center chips to a major hyperscaler within the year, with further details scheduled for the upcoming June Investor Day. He also indicated that the smartphone market is poised for recovery following the third fiscal quarter, suggesting the cycle has bottomed. The company is capitalizing on burgeoning opportunities in data center chips, focusing on CPUs, inference accelerators, and custom ASICs following the AlphaWave acquisition. While acknowledging they are in the early stages of data center expansion, Qualcomm is actively building capabilities and customer relationships in response to increasing demand for AI-driven computing from cloud providers. Market analysis supports the rally, with Channel YouTube's Edge stock rankings showing a complete positive shift across short, medium, and long-term trends. Furthermore, the stock has rallied significantly, reaching approximately $180 ahead of earnings, despite previous commentary suggesting investors would not profit near $130. This momentum is underscored by strong customer relationships, with Apple reportedly representing $8.8 billion in business. Analysts also note that Qualcomm trades at a relatively low valuation compared to other semiconductor peers, hinting that the market may be underestimating the current cycle's strength. The stock closed at $186.55 on Tuesday, marking a 10.79% increase, and continued to rise in pre-market trading on Wednesday. In related news, Qualcomm surpassed analyst estimates for the second fiscal quarter, with the company projecting a return to sequential growth in revenues from Chinese OEMs in the fourth quarter. Qualcomm CEO Cristiano Amon is signaling a fundamental shift in how individuals interact with technology, predicting that the smartphone may soon be superseded as the central device in our digital lives. In an interview with Channel YouTube 500, Titans and Disruptors of Industry, Amon asserts that the coming year will be defined by AI agents, sophisticated artificial intelligence capable of executing specific tasks. He forecasts that by 2028, meaningful workloads will transition from phones to new AI-first devices, with an AI consumer device emerging as the primary platform for personal assistance, potentially serving hundreds of millions globally within 5 years. Amon's primary bet for the device of the future lies with smart glasses, given their proximity to human senses, though he also anticipates that wearable forms like pendants and pins will become widely adopted. He stated emphatically, "The center of your digital life will no longer be the phone, it's the agent." Given Qualcomm's pervasive role in powering everything from PCs and cars to data centers, and its strategic partnerships with giants like OpenAI and Meta, Amon's predictions carry substantial industry weight. This evolution implies a dramatic change in user interaction. Instead of being reactive, future devices will be anticipatory, streaming personal data to proactively perform tasks and suggest actions. For executives, this signals a new paradigm where devices will function as strategic thought partners, necessitating a complete reimagining of organizational structures and processes to manage AI agents as digital employees. Beyond the tech sphere, the business landscape shows continued turbulence. Anduril, led by CEO Brian Skimpf, is aggressively building a defense contractor focused on AI-powered drones and sensing systems for the Pentagon. Meanwhile, major tech firms are restructuring. Coinbase CEO Brian Armstrong announced layoffs and a flattening of the leadership structure to improve coordination. In enterprise software, ServiceNow is deploying AI agents to resolve IT tickets faster than human staff, though its chief product officer suggests the next generation of AI must be capable of sensing, deciding, and acting autonomously. On the financial front, global markets showed strength, with S&P 500 futures and various European and Asian indices posting gains. The broader tech and geopolitical environment remains dynamic, with reports surfacing regarding labor unionization, efforts among Google DeepMind workers concerning military AI contracts,